Good morning, everyone. Thank you for joining me on this month's edition of our Compliance Corner webinar. My name is Sam Peacock and I'm the Business Development Manager here at Landmark. I've been helping agents to tackle compliance and remove that headache for a number of years now. And we like to run these webinars as a way of helping agents to understand and keep up to date with the guidance. So today's webinar shouldn't take too long to run through. As always, these sessions are recorded and will be posted on our YouTube channel afterwards, and a copy of the recording will be sent out to all those who have registered. Our YouTube channel, in case you ever wanted to look out for it to find previous webinars, it's simply called Landmark Estate Agency Services. So for this month's webinar, we are going to be focusing on the difference between customer due diligence that you would apply to your low normal risk clients and then enhanced due diligence, which you would apply to your high risk clients. Hopefully you'll find today's webinar useful, but if you do have any questions after watching this, my contact details will be on the very last slide of the presentation. So we have talked about what HMRC mean by a risk-based approach quite a lot in our previous webinars. With regards to this risk-based approach, you must have a written risk assessment of your business that highlights potential risks of your business being used for money laundering and how you tackle those risks. So bearing this in mind, you need to think about how you interact with your customers and the nature of your business relationships and the different levels of risk that your clients pose. HMRC do give some advice on things to consider when writing up your risk assessment in the guidance. You also must have a written policy statement that is communicated to all your staff that outlines how you tackle anti-money laundering and what your procedures are. Things to include, such as how you verify your clients, how you identify when someone is politically exposed, how you report suspicious activity reports, and how you keep a record of your checks and ongoing monitoring. You must complete a suspicious activity report if you deem any activity to be suspicious and submit this to the National Crime Agency. Larger businesses must also appoint a compliance officer who monitor the effectiveness of the controls. The senior manager in the business has a number of responsibilities with regards to anti-money laundering, such as they must be writing your risk assessment and your policies. They must appoint a money laundering reporting officer. They must ensure staff are trained on the money laundering regulations and that they have the right knowledge. They conduct ongoing monitoring and audits on the effectiveness of your policies, as well as demonstrate a risk-based approach and devote enough resources to this. You should also appoint a deputy to act in the absence of the nominated officer. The customer is the person or entity with whom the estate agency business forms a business relationship with, which is also usually a contractual relationship, often referred to as the client. This can be a seller, that is the owner or owners of the property or other interest in land, or the person or persons who buys the property. For sales agents, it's usually the vendor, although in the case of repossessions, it might be a lender. A property finder will normally act for a buyer to find a property. An auctioneer may act for sellers, buyers, and bidders. The regulations state that an estate agency business enters into a business relationship with both parties to the transactions, that is, both the property seller and the property buyer, at the point in which the purchaser's offer is accepted by the seller. Section 4 in the regs defines what the guidance perceives as offer acceptance. The person who is not a customer in the commercial sense, so the counterparty, must be treated in the same way as a customer for the purposes of the regulations. For example, the same obligations apply an appropriate level of customer due diligence. You must ensure your customer due diligence is complete prior to entering into a business relationship, and you must keep records of the checks for 5 years. So before you list the property. And HMRC will check the date on which the property is published against the date of your client verification. With regards to purchases, client due diligence must be complete before contracts are exchanged. In reality, this needs to be as early as possible and can be done any time after an offer is informally accepted. You do not need to undertake retrospective checks on purchases prior to the changes on the 26th of June 2017. In terms of sellers, you need to identify all the legal owners and beneficial owners of a property before you can market the property. In terms of what you need to comply with the requirements when it comes to applying customer due diligence, there is a list here on the slide taken from the regulations. I suspect it includes some of your own current activity. So you must, for example, complete customer due diligence on all customers and beneficial owners before entering into a business relationship or occasional transaction. Complete due diligence on the counterparty and any beneficial owners involved in the property sale, and have procedures to identify those who cannot produce standard documents, for example, a person who might not be able to manage their own affairs. So for the vast majority of people you deal with, it is enough to demonstrate that you've acted in this way. However, a very important point is almost buried in here, and HMRC are very hot on this. You must apply enhanced due diligence to take account the greater potential for money laundering in higher risk cases, including in respect of politically exposed persons, or PEPs as they're more commonly known. Where you're identifying higher risk clients, you need to undertake an evidence that you have applied a greater level of check on them, and that is what we call enhanced due diligence. So enhanced due diligence applies in situations that are high risk again. So this is why you need to have this risk-based approach. It involves taking additional measures to identify and verify the seller and the buyer's identity and doing additional ongoing monitoring. In the case of PEPs, this will include source of funds. Applying enhanced due diligence will be dictated by your own risk assessments, your policies and procedures, but HMRC have provided some pointers about indicative behaviours of those we might consider to be high risk. We also have produced a risk and red flag guide, which if you contact me after this, you can get a copy if you haven't got this already. The slides point out here the different types of scenarios that would deem requiring enhanced due diligence. But what additional measures can you take to demonstrate you've carried this out? You could do things like obtain more information to establish the identity, verify the documents they've supplied, or require that they're certified by a person with an authority to do so. Ensure payments are made through a bank account in the same name as the person as your client. And with PEPs, you could ensure you establish the source of wealth and the funds. But overall, it means just doing more to scrutinise and understand the business relationship and the history and the financial situation of the parties involved. Again, the guidance provides further indicative things you can do to demonstrate this enhanced due diligence. If you cannot comply with the customer due diligence measures, you must not carry on estate agency work for the seller or the buyer. If the individual is not willing to provide their identity, you must terminate any existing business relationship with that seller or the buyer, and you must consider whether to make a suspicious activity report to the National Crime Agency. Here on the slide, it highlights the penalties for non-compliance. Now, we have heard in industry press of agents being fined, and they are no small sums. Not to mention the stress of going through an inspection and being taken through the procedures where they deem you non-compliant, as well as how it can affect your business income. This pressure isn't going away either, as the government are currently working on their Flag It Up campaign. This is to try to reduce the billions that is laundered through the UK every year. There's also going to be a fifth directive to the money laundering guidance released next year. Here at Landmark, we provide pay-as-you-go electronic anti-money laundering checks that can help to modernise your AML procedures, as well as tick a number of boxes within the regulations when it comes to applying your customer due diligence, all in under a minute. If we refer back to the guidance from HMRC on what you must do in order to carry out customer due diligence, the electronic checks will enable you to both complete and document your due diligence on all customers and beneficial owners before entering into a relationship or occasional transaction, and carry out due diligence to the other party of the property sale. They help you to give a procedure to identify those who can't produce standard documents. They help to provide a system for keeping copies of customer due diligence and supporting records, as well as helping to keep that information up to date. Using electronic data is a more thorough method than using paper methodologies, as clients invariably have different levels of information that they can provide. Some may or may not have passports or driving licenses, for example. For your low normal risk clients, our checks can help to negate the need for ID in most cases, saving you valuable time when onboarding clients. For high-risk clients, our checks can also be used to help you to verify paper documents when taking these from customers, either as originals or certified. Or if you use the selfie method, you can also verify that ID is real using the AML checks. The selfie method is where you get the client to send you a photo of themselves holding their ID so you can compare for likeness. The selfie method alone would not be compliant, but verifying the ID with an AML check would be. Electronic checks provide an interpreted pass or refer result using the data available, and it identifies those on sanctions lists and anyone who's politically exposed. In a world that is more paperless by the day, requesting paper copies of ID from clients can present a growing challenge. Instead of doing this and potentially slowing the transaction, how much more positive an experience are you providing your client with electronic checks? Instead of valuers chasing down photo ID or paper documentation, what if that time could be used to chase new leads and valuations? If you've watched this webinar today and think you benefit from a free compliance consultation from ourselves, then my details are here on the slide. Please don't hesitate to contact me and I can book this in with you and run through any questions or concerns you may have. Or if you'd simply like to know more about the prices of our electronic checks. Thank you for listening and have a brilliant day.